Let's get into the little details of the mathematics for you, Niyati. So we've got 5 years, right? And 5 years is the time that we're playing with. So you've got 3.5 lakhs already in mutual funds. Now, 5 years is the bare minimum time that we would advise someone to even get into the equity market, you see. So it's kind of borderline. Had it been 6, 7, 8 years, not so bad. But because it's a house, it's okay, because you know your house decision is also not like an instant thing. By the time you go out to search for one and fix on something, and by the time you get your agreement and things done, it could easily be a period of 6 months to 12 months. So buying a house is a very fluid sort of a decision in terms of time. So which is why we don't mind staying in equities, and we can go ahead with the equity strategy. So now that thing is out of the way. So we are clear we can do what you are exactly doing right now. Then we start looking at the numbers, you see. So you've got some lump sum money and you've got some monthly investment that you're doing. We've got to make a projection of both these parts, A and B, together to see where you will be in 2024, which is say 5 years from now. So your lump sum of about 3.5 lakhs that you have right now into various funds, as you've told us, is likely to be somewhere in the range of 6 to 7. Now that's a probability. It might be a little higher also, might be a little lower, but say you can walk with a figure of about 7, right? Which means if we have to reach a target or a threshold of 30 lakhs in the next 5 years, we are running 23 lakhs short. Now, how will the 23 odd lakhs happen? So the 23 odd lakhs will happen if we were to invest close to about 25 to 30,000 on a monthly basis. So against that, you're doing only about a third. You're doing 10,000 right now. Well, what that means is that you need to do it 3 times more. From what I understand of what Alex just sort of ran before us with your income and expenses, there is a surplus of 3 lakhs at the end of the year, which is effectively 25,000 a month. So I'm just guessing, with a little bit of compromise here and there on the expenditure, etc. If you can actually manage pulling off 25, 30,000 of SIPs instead of 10,000, then you are looking at a figure of approximately 30. So 30 is a good chance. I would put a number of almost 65 to 70% on you accumulating 30%.